Disclosures are very important. Please read them. If you're new to trading stock and options, again, I encourage you to visit optionsclearing.com. Link you see on your screen to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. It should not be assumed that the future trading picks will be profitable or will equal past performance. All right, trading psychology. Let's go over, again, main concepts in trading psychology. And in trading, I think this is extremely important. Mark is here, loud and clear. Welcome back, Mark. Again, every day you have two narratives, right? You have soft landing and hard landing. In the morning, China now, announced that their PMI data and the PMI data across European zone is better than expected, right? And economy is expanding, faster reopening in China. China is up. Last time I checked was 4%. At the same time, so that feeds into the soft landing, right? If China is reopening and provides boost into economy, that means that Europe is going to grow, the United States is going to grow. This is the second largest economy, right? Soft landing or no landing narrative. At the same time, an hour later, you're getting data from Germany showing that the inflation data, the PPI data, is worse than expected, right? 2 months in a row, you have France, Spain, Chile, Germany, all showing that inflation is not basically going to stay longer and higher than everybody anticipated. And that feeds into a hard landing, right? So market is gyrating between, and even currency market and treasury market has been pretty correlated, very highly correlated. But the dollar did sell off on the news from China, at least last time I checked, was still down significantly. But the interest rates are rising, right? So you do have this divergence. We'll see for how long it's going to happen. But you see that different markets interpret the same information differently, right? So how do you deal with this uncertainty, right? The duopoly, the economy. I propose to concentrate on things that you have control over, right? The only thing you have control over are your own thoughts and actions, right? That's the economy of control. Have a trading plan, the written down rules, right? Keep a journal of all the trades. Just remember that some trades will be successful, some will be unsuccessful, but making sure that you follow your plan is extremely important. So cash is number one. I propose that if you believe in soft landing, right? If the China is reopening and manufacturing GDP in Europe is better than expected, then 30% in cash. If you think ECB is going to raise 50 basis points now instead of 25, if you think that CPI data will be worse than expected in the United States and inflation is going to rise, right? And Fed maybe even also consider raising by 50 basis points, which market does not factor in. And you're in a hard landing camp, then I propose 50% cash, right? And nobody knows exactly what we're going to have, right? You can be in hard landing camp and be wrong, or you can be in soft landing camp and be completely wrong, right? At this point, nobody knows, right? And you can hear it on the news, you can read the reports from Goldman Sachs and Morgan Stanley and JP Morgan. They're all in their mind every 2 weeks, based on the data that arrives, based on the data, right? And since we haven't had these conditions in the past 40 years, then you can't really model it well or make a prediction. So cash is important, right? Cash is important in case market does pull back 20 to 30%, right? You want to have cash. You don't want to be in a position where market pulls back 20 to 30% for whatever reason, and all of a sudden you don't have any cash. So I propose to have cash. And another reason, you turn on TV or you go to your Twitter handle or Twitter account, and almost every second conversation is why take a risk? 6 months treasury or money market fund pays you 5%. Are you going to is the stock market going to be up more than 5%? in the next 6 months or 12 months? Everybody says, I have no idea, but I do know I'm going to get 5% on my 6-bond treasury, and it's backed up by US government. So it's an environment where people are going to be risk averse, right? So for that reason, 50% of your portfolio in cash, and it doesn't have to be, when I say cash, I say money market fund. And right now, money market fund outperforms bond market, probably will outperform the stock market. So that is the really good reason to keep 50% of your portfolio in cash. Right? Because before everybody says, well, Vlad, I mean, 90% in cash, that's not good. Well, if you can, somebody guarantees you 5% return in the next 6 months or next year, I think that's a pretty good trade. Second one is portfolio drawdown, right? You might say, Vlad, 5% doesn't make any difference in my living. I want to make 20%. Okay, I get it. Makes sense. We're all, managing different amounts of money and have different risk tolerance level. So then, yes, portfolio drawdown. I propose to have, if you want to, get more than 5% return, then I propose to have 4 positions and no more than 2.5% of account value. Because narrative doesn't change. For every bullish argument, I can give you a bearish argument. For every bearish argument, I can give you a bullish argument. I propose the best way to handle this is market neutral, right? Market didn't really go anywhere in the past 12 months. I'm going to make a bold statement that in the next 12 months, it's going to be at the same point that it is now, right? So if that's the case, then the only strategies that work are market neutral, right? If you buy stocks, consider selling calls. If you don't know how to sell calls or are not comfortable, consider breaking your position in two trades, right? Find different support levels. Maybe you buy a little bit at 50-day moving average, and then you buy a little bit more at 200-day moving average. Or you buy a 200-day moving average, and you buy 20% below 200-day moving average. Something along those lines, right? And you have some. And if you're not comfortable trading options, there are you can buy stocks that are inversely correlated to the market. PSQ, SH. So 4 positions, 2.5%, not risking more than 2.5%. That is, we all have control over that, right? Nobody can take that freedom from us, so flexibility. And I believe that's the most important rule, right? Cash and making sure you don't risk more than 1% of your account value per trade, right? Or 2.5 per position. How do you do that? Everything is very highly correlated to the spiders. Very few stocks can consistently outperform. I know some people don't agree with me, but I would make a bold statement that 95% of the stocks out there are highly correlated to spiders. And even if they are not, that divergence is going to last only so long, right? Maybe a month, maybe or 2. And if you can time the market perfectly, great. But if you don't, eventually they will come down. Like you can look at the Merck, you can look at HPQ, IBM. All of these stocks, everybody thought they're going to outperform. They have, and now they underperform, or vice versa. So, okay. So let's say you look at this chart, and any traditional technical analyst will say, okay, I don't care about the news, but 200-day moving average, 50-day moving average, we broke through the downtrend, right? Broke through the downtrend. Bulls are in control. Yes, I mean, they've been fighting for this control for the past week. But eventually, the market is going to rally, right? China is up 4%, dollar is down. There's no reason to think that yield is going to pull back, right? Not going to pull back. So, okay, you're bullish. So you're buying at 396. What do you get out? Immediate support is last week low on 200-day moving average, right? We already tested 200-day moving average last week. Potentially, we can test again this week, right? Market is getting close. We're 395. So we're basically testing last week low. Market has a tendency to overshoot, right, on the upside and to the downside, right? We overshot on the upside, we can overshoot on the downside, right? That's just the nature of this current market. So you do have a support around 390, right? If you buy at 396, even if you day trading, I would consider maybe this is your support one, right? Support one, about 388, 390. So you're roughly risking, let's call it 10 points to do the math easily, right? 10 points, right? If you're doing day trading or if you're doing holding position a couple of days, right? Weekly trading, like weekly trader, aggressive trader, that would be the stop loss number 1. And stop loss number 2 is a December low, right? That's stop number 2, right? So This is probably a buy zone, right? And this is a buy zone, right? Because you're bullish, China is expanding, manufacturing in Europe is great, Chile is expanding their production output, copper prices are up, silver prices are up, all in. So, okay, so that's your stop losses. So if it's 388, you're either risking 10 points. If it's 378, you're risking 20 points, right? I propose to break your trade position into two. So if you want to be long spiders, maybe you put half of your position at 396 and maybe put the other half at 385. And on a $10,000 account, 2.5%. Right, so it means if your average account is $10,000, you don't want to risk more than $250 on position of spiders, and you break it down into two, right? Either use supports to buy, or use different options with different strikes. Right, you can buy 390 call and you can buy 380 call, right? And just risk and never risk more than $100 per trade or 250 position. That is the most important rule. Everything else will fall in place. If you're having too many positions, or your position size is you're risking more than 2.5%, eventually you'll be on the wrong side of the trade, right? If you're in hard landing camp, you have rallies where you don't anticipate that. If you're in soft landing camp, you see sell-offs that you don't anticipate, right? If you're down 10%, 4 positions, 2.5%, not the most pleasant experience, but you can get back to the whiteboard and figure out, what you did wrong, what you did right, and regroup. If you're down more than 20%, you really usually don't regroup, you kind of give up. So that's my take on the market and on trading psychology. In terms of stock forecast toolbox, not much has changed, right? It still shows downward trend. It does see 390 as a strong support, 396 overhead resistance. I agree with the market model. I think we're still trading in that short-term and downtrend. We need a reversal. We do have first signs of exhaustion, right? Let's look at the 6 months. We recalibrated. So 421, right? So 6 months getting more neutral, right? You can see yesterday it was like down 3%. Now it's slightly 1%. Model basically showing, listen, market has been extremely resilient. We broke the downtrend. We're not as bearish as we used to be, right? It actually see that we're not even revisiting 52-week low as of right now. Right, model basically says, unless something changes in the market, based on technical analysis, we are not soft landing, right? We're not going into 52-week low. That's what the model says, right? Maybe 376, maybe 370, but not 360. So that something has to change, right? What can change is, it's all about interest rates, right? As long as interest rates continue to go higher, right, and making new highs, within break on 2-year yield, then the rally is not sustainable, right? So yield has to pull back in order for the model to be correct and for soft landing to be correct, right? Yield has to drop. If the yield goes this way, then the model is wrong and the soft landing is wrong. So we just have to see, and it's a little bit exhausted, right? It's a pretty big rally, right? I think, again, this was the best month for the bond market, right? And February was the worst month for the bond market. Again, some crazy, 30 years, past 60 years, irrelevant. Very, bond market usually doesn't move like Rivian, right? It doesn't. So we just have to wait and see. Meanwhile, dollar did pull back, so that's the bullish argument, at least for short term, that the market should find the bottom around 200-day moving average and should rally. Dollar is pulling back. Yield is not, right? Because dollar is driven by China, right? Where's China? Silver is up, China was up, copper is up, and China is up, right? China is up, copper is up, but yield is not because of the inflation data from Europe. So we do have 9 o'clock, right? 9 o'clock, we're gonna get ISM manufacturing data. So, and that can spark volatility. Right now we're in contraction. It could be one of those, if it comes in as about 50%, then the yield continue to rise, right? Good news, the yield continues to rise. If it's contraction, 46 or 45, okay, then, then it goes the other way. So That's going to be in half an hour. Meanwhile, what else is interesting? Calls down 1%. Horrible earnings was down 10%, but recovered nicely, only down 1%. Lows down 1%, CPNG down 5%, HPQ flat, Rivian down 10%. So if you were at the closing bell yesterday, I didn't do any trade in my account because all of them are risky, right? They're all very, well, lows, the risk was not enough premium, but the rest of them were just very volatile. But, you know, if you did do them, this is the time to close them. Let me review my positions, make sure I can close them too. So I'm just going over my orders. Give me a second. Let's watch the market. So spiders, it's pulling back. Basically, we're testing last week low. Let's see if the 200-day moving average will hold. That's the most important. And we have 20 minutes till the next data point. So again, if you're day trading, you probably don't want to day trade right in front of this manufacturing data, right? Because either yields are going to rise or they're going to pull back, right? They're sitting at the key level. So this is something to consider when you're day trading. Just watching Rivian and CPNG. For the earnings, Any questions? Mark, thank you. Good morning, John. John, this is my camp, all right. Mark is going to pull back by summer. John, have cash, all right. 5% is great, tax-free. Thank you, John. Germany inflation came in worse than expected, Bob. Yeah, so that feeds into this hard landing camp, right? Something has to give, right? Either unemployment is going to jump and manufacturing is going to contract, right? And we're going to have some kind of type of recession, or inflation is going to continue going higher. That's the narrative, right? Right now, well, that's the hard landing here. That's what hard landing narrative is. Soft landing basically says, well, you know, manufacturing can expand and people can sell and shop and China can reopen and inflation will slowly, you know, drift lower. But, you know, obviously January and February data across the globe showing otherwise, right? It supports the hard landing narrative. It's just not enough people believe in that, right? You need multiple touch points, right? Nobody wants to give up their positions that easily, but, you know, at some point, you know, no matter how stubborn you are, you can really fight the data. And if inflation, if either ECB is going to raise by 50 basis points, that's already probability has spiked up. That Europe is going to, you know, be more aggressive in the quantitative tightening and raising interest rates, or United States will come out and say we're going to, you know, speed up our quantitative tightening, and or, you know, not going to pause anytime soon, right? So that can shift the balance between bulls and bears. But for now, it's kind of, you know, people are kind of still, for every bullish argument, they kind of analyze the bearish argument and, you know, continue on. John, okay, range bound, I agree, okay. Thank you, John. 3 times before, thank you. A put a 105 looking gain for a move down. So Desi had a question on TLT. My immediate opinion, right, short-term opinion, is that the 2-year yield is overbought, right? This is really overdone, right? And we already see that the dollar, let's see, where's the dollar? Dollar is already pulling back. China already rallying, right? And people are stubborn about the interest rates. So I do think that market will pull back, right? And break even 52-week low. The question is the timing. The timing, I still think, is, you know, we might do this, right? In April, we do this, and then we jump back. Or if the inflation, or if we see signs of recession, we're going down. I think today, either Moody's or some other, you know, research, I forgot who it was, but already said that third, so we're going to have positive GDP in first and second quarter, and then negative GDP, down 1%, third and fourth quarter, right? Right now, people kind of dismiss these news, right? Because they don't think, you know, nobody knows anything. But if they're true, and we're going to have a third and fourth quarter of negative GDP, you know, then interest rates will drop, right? People think that interest rates are heading to 6% because of the high inflation, right? High inflation, or that's possible, right? If we have high inflation and we still have positive GDP, second, third, fourth quarter, then yes, interest rates are going to 6%. But if Moody's are correct and set third and fourth quarter, we're going to have a negative GDP, market will start sensing that in the second quarter, right? And then it'll be, the market will, the correlation will change, right? The rates will drop and the market will drop. So personally, I am bearish on interest rates. I think TLT is going higher. So I do think that TLT is still going higher. The unknown is when is this inflection point? At what point do we see signs of recession? Now, we see signs of recession every day, but I think people are waiting for concrete evidence, right? Okay, we are in recession. So I think there is a low probability that it will do this, right? Right, 92, right, we said 92. So I'm a buyer at 95, right? Just like I'm a buyer at 100. just like I'm a buyer 107, right? So I have a strong opinion that soft landing, hard landing, TLT is heading higher, right? TLT is heading this way. I have a strong opinion, so I'm a buyer. If it breaks through this level, I'm going to have to scratch my head. This is a high inflation idea. And even if it breaks through this level, still the narrative doesn't change, right? Because if the interest rates are going to be at 6-7%, well, then the recession is going to come much sooner than everybody anticipates, right? Because there's only so long you can have this hyperinflation and high interest rates before market is going to, bulls are going to collapse. Timing it is different. My scenario, I favor that it's overdone. This level holds, right? We might overshoot a little bit, maybe 97, 50, I don't know, and then we're going higher on TLT. And if I have to guess, this is the low of the year, right? Basically, unless we have hyperinflation and Fed pivots, right? Fed says, okay, let's just lower interest rates because, we still see signs of recession, inflation takes over, well, then we can do this. But I think this is a low probability, and I think this is a high probability, right? So I favor this outcome. All right, Desi, hopefully it helps. Good morning, Faust. FXI is soaring because of the PMI data, right? Their expansion, A, they sold off significantly, and B, their PMI data is much better than expected. So they're reopening much faster. To balance portfolio, to be more bearish, would you pick QQQ or NVIDIA? It doesn't matter, right? NVIDIA is higher beta, so you would just have to buy less NVIDIA, right? If you have, I don't know, let's say it's beta 2, if you buy $1,000, if you're shorting $1,000 of QQQ, then you would short $500 of NVIDIA. But their chart looks identical, right? Right, NVIDIA chart looks like QQQ chart, right? It doesn't look any different, right? But you can see it's a little bit more overdone, right? I think it's already at August high. They beat the August, September, right? So they are close to May high in March. So it's going to drop more than QQQ, just like it's rising more than QQ, it's going to drop more than QQQ. So you just have to find that coefficient, and I think it's probably 1 to 2 or something like that. Right, NVIDIA is down 28 basis points, QQQ is down 11, so it probably moves 1 to 2. All right. What else is interesting and brewing? Let's see. Let's look at my earnings. Calls turning positive. Right. It just shows you, that sometimes very hard to predict market earnings. Right. There's nothing positive about this report. They were down 10%. Now they're up 4%. The market is down. So, some news, I'm out of actually calls. I can close the calls. I don't need to watch them anymore. Lows still down 2%. So I had calls. We said the risk is to the downside. So that was accurate. I'm out of lows. And I'm out of HPQ turning negative. It was up 3%. Now it's down 1%. So it shows you again. You're going to have these swings during earnings. Okay. All right, and Rivian pull back, CPNG pull back. Let's see. Look, give me a second. I have 10 minutes left. Rivian, CPNG fell. Let's see Rivian. So watching CPNG. Let me know if you guys have any questions. So we have 10 minutes for the announcement. All right. Let's see. Let's look at the interest rates, see what's going on with interest rates, 2-year yield. So basically, we're testing 52-week high. Not breaking for now. Let's see. 10-year Bund dark. Should be able to see it here. Bund. 10-year Bund here. No, that's not it. Interesting. No, I can't find it. But okay, this is right. Okay, so 5 days. Display candle. So they're up, right, to 69, right? Okay, so 10-year, 10-year Bund did break through the 52-week high, right? It did break through the 52-week high, but it is pulling back, right? So this was 257. So it's 269. So it is breaking above, but again, it's also overbought, extremely overbought, and it's not breaking out on worse than expected inflation. So that's good. All right, and US is same kind of idea. So dollar is down, right? That's the bullish case. Right, we have a significant pullback in dollar. 2 years steady, VIX complacent, 20, QQQ flat, spiders flat. Gold miners have a strong rebound, right? So dollar-related asset classes, China, dollar, silver, that's all. Copper, that's all heading higher. SMH has been outperformed. Yes, SMH has been outperformed. SMH has been strong. It's broke through the August high, right? It broke through the August high, where QQQ is not at August high. I mean, chart looks the same, but it has been outperforming. It's already above August high. And it's not that far from February low, right? I mean, it's almost exactly at February low. So it's, in the past 12 months, basically didn't go anywhere. So it's good. Thank you, Bob. Any other questions? So 4 minutes left. If you guys have any questions. Meanwhile, let's review the positions, see if we want to make any changes. All right, let's review. So SMH actually up 1%. QQQ is negative. TLT is down. Okay, let's review the rest of the positions. Not much has changed. So until market breaks out one way or the other, I mean, it doesn't make sense to rebalance. I would rebalance if your beta portfolio beta is more than 1, right? Upside or downside. If you're bearish and your portfolio beta is over 1, I think you're overly bearish. If your beta is over -1, right? I mean, if it's more than 1 or less than -1, you're either overly bearish or overly bullish, right? I think the rally will be capped. Best case scenario, I think we'll get on spiders 420, 430, right? I think that's my favorite. This is what I'm trading, with the idea that we will revisit 420, 430 level in the next, going into, end of March, end of April, and worst case scenario 390, 380, right? So for that reason, I mean, there is a little bit room to the downside. I think there is more room to the upside. So maybe beta 1 makes sense, right? As opposed to, or, a little bit less. But that's that, any other outcome, if you think we're going to go here, you probably, at least wait till we break through the 430 to be overly bullish. And, if you're overly bearish here, same thing, wait till we break through December lows. Right? Until then, we're trading in the range, and most likely for the next couple of months, when we do this broadcast, middle of April, we're probably going to be at 400, right? Just like in November, we were at 400, March 400, April will be at 400. All right. All right, so where's the news? Let me see if that came out. All right, so let's see. What was the data? ISM manufacturing PMI for February for 47 versus 48. 47.7 versus 48, right? What was the predicted? 47.8. So 47.7. So it came in basically in line, maybe a little bit worse. And market, does it have any reaction to that? Probably not, right? Probably not. Okay. So it came in line with expectation. Maybe slightly worse. Kashkari speak, I'm conscious of, hey, if we declare victory too soon, there is a lot of exuberance, and then we are going to have to do work to bring the back down. So we're going to continue doing what we're doing until we finish the job. FOMC, okay, that's old news. US construction spending down, estimated up. And US manufacturing, we talked about this. New orders are better than expected, actually. Employment is a little bit worse than expected. Prices paid higher. So signs of inflation. Okay. Let's see how the market reacts to that. So far, yield is up. QQQ turning negative. Spiders turning slightly negative. Let's see what happens. Ted, yes, 47.7, 47. Thank you. Today I'm available. Yes, Todd, we do have a closing bell. I'm not doing the closing bell. Wednesday is one day. where I don't do the closing bell, but I will do the earnings. I will do the earnings. So 1 day out of the week, I don't do the closing bell. It's Wednesday. So I'll do it tomorrow and Friday. Sorry, Todd. Before you end session, can you make a quick comment about the weekly power trader? Weekly power trader is based on a model that makes prediction for next week or two, right? So if you're bullish, right? So let's say ConocoPhillips, right? So I mean, obviously, it's, you know, you have to find support and resistance to enter, right? So ConocoPhillips, you do have a support, right? Oil pull back. Your model see a bullish momentum. It's oversold. It's below 200-day moving average. You know, you have a clearly defined stop level. If it breaks below this level, I would be out, right? It's a weekly trader for, it's meant to be 1 or 2 weeks, you know, and, you know, look for maybe 1 or 2% gain, right? And ConocoPhillips. So the risk versus reward makes sense. There was British Petroleum before that. I think it's stronger stock. So maybe British Petroleum is better, but this was, you know, the model identified. CNQ, it identifies CNQ. And the same idea, right? It's energy, gas oversold, right? And you know, at this point, it would have been a good entry, right? On the, you know, beginning of this week if you did it. So again, you look at for support and resistance levels. I mean, model does then show you. I mean, you have a strategy AB, you either buy on Monday morning, right? Or you wait. You know, I prefer to wait, right? Because there's a news and events, right? So I would prefer to try to wait for the proper entry. And same thing with Google, right? I mean, it's overdone. Models see it being overdone, potentially going higher. Same thing. I mean, you have a clearly defined stop level, you know, this December low, right? If it drops below 86, you would be out, right? So 2 to 3% here, but you know, it might reach 96, 95, right? So that's how I would use this trade. It gives the model basically identifies stocks that should outperform the market in the next week or two. So you either buy them always on the Monday morning. I usually don't like to do that. I would wait, look at the chart and find support level and then enter the trade. So William, let me know if that makes sense. Todd, okay, thanks. China. So let's see what else is interesting. We talked. Did we finish? No, we didn't. Okay, so let's review the rest of the positions. Russell 2000, June position. You know, market kind of going up and down, up and down. It hasn't really gone anywhere. Russell 2000 is also outperforming, right? Just like. What's better than semiconductors, right? It's retesting August high. It's retesting August high. But again, it pulled back. I think by June, we will be below 200-day moving average. So I'm not changing my opinion yet. So June position, I have time. I'm out of NCLH. NOC, right? NOC, nothing has changed. It's kind of trading. I did reduce the position. It's pulling back. You know, if it's, you know, if revisits some of the cost basis like 430 or 440, I would consider adding. But for now, I'm just waiting. QQQ, not much has changed, right? I have April where I'm bullish, right? I think we're 200-day moving average will hold. We might overshoot, or we already in there. And then I think going into April, market goes higher. So I'm bullish in April. I'm bearish in June, right? Calendar spread or market neutral strategies. If you're not comfortable trading options, consider buying SH, inverse ETF, is another way to hedge your portfolio. I have a small silver position. I think silver is overdone, right? Dollar pulling back. Silver rallies, China rallies. It's the same trade. Spiders, again, I think we reached the bottom. Well, not reached the bottom, but we're close. We're building the bottom. We're building the bottom, and I think I favor where we break above 402, right? Right, in next week or so, we're retesting 52-week low, right? We're retesting last week low, retesting 200-day moving average. I think we hit 390, and then we go back up. But we need to clear 402 level, right? So the most important level to clear is this 402. We spent already, I don't know, almost 2 weeks of, unable to clear 402, and we've seen this 402 many, many times in the past many, many years, right? So I can zoom out. I've seen this magic number. I don't know what's so magic about 400, but it's magic. So until we clear this magic line, I wouldn't be overly bullish, but I still favor this breakout, right? I mean, we have this, right? We either break to the downside and retest 52-week low, or not 52-week low. We either retest December low or we retest February high. I favor this, right? But this is not going to happen until the 2-year yield pulls back, and until we break above this level. Until then, you don't know where that, I don't really know if this will hold or this will hold or this will hold or even this, right? As long as we're below 402.5, market is prone to, the pendulum is prone to swing to extreme, right? So this is the second retest of 200-day moving average. We'll see how far we're going to get. So far, right? Which is weird, right? Because bad data should be good for the market, right? Because the anticipation that yield is going to collapse. For some reason, that's not the interpretation, but whatever. It's kind of, I think it's just more of a momentum, right? And momentum, right? Momentum is behind the 2-year yield, and it just continues grinds higher, higher, higher. But it's overdone, and there's divergence with the dollar. Dollar is actually also almost flat. Okay, we just have to wait and see. Bears are going to push 200-day moving average. Bulls are going to push above 390. I'm probably going to buy spiders at 387. I think we'll get to 387, 390. I would be a buyer. What does the model say? Model says. Model says 392. Okay, so model has been pretty accurate. Right, 390, 392. If you're a short-term aggressive trader, you would be buying. All right, 912. We have covered the spiders. TLT pulling back. I'm going to be, every time it pulls back, I'm going to buy. So 100, 107. Okay, next one is probably 95, 92. I would be a buyer. Biotech, again, I favor break to the upside above 402. If spiders break above 402, biotech will break above 85. But not a lot of time left, right? I only have 2 to 3 weeks, so this rebound better happen soon. Otherwise, this would be. I did close half of the position, but I still have half of the left. March 35 XLF again. We're retesting 52. We're retesting last week low, right? We're trading again that below 50-day moving average. If potentially, we can pendulum can swing to extreme to 35. Again, the problem was XLF and the problem with biotech is that it expires in 2 weeks. So time is ticking, right? Tick tock, and we need to break out of this range. The good news is that one is bullish, one is bearish. So at least on one of them, it should be a favorable outcome. But June, I'm more bearish. Right? So I have 2 positions in March, 1 position in April. I have time. Any questions on the? Any questions on? On the market, 913, 2-year yield continue to rise. Let's see. Rivian continues to sell off. Okay, so I close Rivian, so CPMG, I have CPMG, 13 put. So if you do have CPNG, you can close that short 13 put for 6 cents now, which is still profitable trade. Okay, so I'm out of CPNG, I'm out of Rivian. Okay, all right. So 9:15, any questions? Bitcoin, the question is, how is Bitcoin gonna behave in the hard landing? This is a proxy for risk taking, right? So it's gonna, if there's a hard landing, just like last year, it's gonna collapse, right? It rallied just like semiconductors rally, but it's gonna collapse, right? It's gonna do what high yield is doing, right? High yield is actually already moving down, right? It's retesting December lows, right? So high yield Bitcoin ARK Innovation is a proxy for how exuberant the market is. And right now, you know, again, you have these divergences, right? High yield shows that people are careful and they're selling junk bonds, but Bitcoin enthusiasts are, you know, they're usually the last one standing, right? This is kind of, you know, very hard to change their mind. But, you know, in hard landing scenario, we will retest and break the lows. William, no, in yellow tunnel weekly power trade, there's a little bit more symbols, but pretty much the same, right? It's a very similar model. It's the same yellow tunnel trades. Any other questions? So we do have a pretty sharp pullback. QQQ is down 80 basis points. I would also watch Dow, right? That's another indicator. Dow is sitting at December low, right? And it's also sitting at the middle of September high. This is very important level. I mean, every level is important, right? So you can see whether it's a dollar or yield or technology or semiconductors, they're sitting on the edge. They are sitting on the edge. It's a little bit overdone, but you know, if you have decisive breakdown, which I do not anticipate, but if you do, then you know, we have to get back to the whiteboard. You know, then we're probably not going to revisit these levels. But I would watch the Dow. I would watch value stocks. They are already. Let's see, how's the VTV? They are already. Is VTV breaking? No, VTV has not. Okay. So it hasn't broke down, but it's trading right at that level, and it's not participating, right? It's flat. QQQ down 1%, Dow is flat, so that would be a bullish argument, right? That this 200-day moving average will hold. All right. That's all I have for today. You guys have been awesome. Thank you very much. I will not be here at the closing bell. Scott will do the closing bell. I will be there tomorrow morning. Thank you very much and have a great day. Phil, thank you. Have a great day. Thank you.